Neil here from Behind the Money. If you've been anywhere near the internet lately, you've probably heard of the impending release of Cyberpunk 2077. Anytime a highly anticipated product is released, we ask ourselves, is there an opportunity for us to make money here? That's what we're going to get into in this video today. We'll take a deep look into CD Projekt, the company behind Cyberpunk. We like to approach our investments holistically. We'll take financials, but we'll use it as just one signal amongst many others, such as management structure, social media trend analysis, or comparables in the same industry. We'll go beyond the surface, or behind the money, so to speak. You'll see how reporting requirements in Poland may be creating an apples to oranges situation when comparing CD Projekt to US counterparts. We'll also take a look into the often forgotten demand in China and how important it may be. So let's dive into this. First, let's go over a brief background on the company and the company's structure. CD Projekt was founded in 1994 by Marcin Iwinski and Michał Kicinski. The founders both sold video games back in high school, and they started the company as a distributor of foreign games to the Polish market. CD Projekt carries two different entities. One is DYODD.com, which is a digital distributor for games. The other is CD Projekt Red, the video game developer. CD Projekt Red is the biggest piece of the business, and it's going to be our primary focus. It was founded in 2002, and it has been known for the Witcher trilogy, which has sold over 50 million copies to date. The trilogy had release dates in 2007, 2011, and 2015, and essentially put CD Projekt Red on the map as a high-end game studio. In 2013, they first released their next franchise, and that franchise is Cyberpunk 2077. Currently, 33% of the company's shares are owned by 4 key executives. This is huge. Management ownership is an important part in analyzing any business, and we love to see a high management stake in the businesses we evaluate. It proves that they are aligned with their shareholders. As we all know, Cyberpunk 2077 has been delayed a couple times, but it gives me reassurance that these were the right decisions, as the ones calling the shots are the ones that are going to be losing the most from subsequent delays. Immediately here, we can see that unlike most video game developers, CD Projekt Red takes their time to release games, and they focus on quality over quantity, not doing your typical quota of releasing one game per year, for example. This has worked in their favor to gain a loyal customer base, but is it going to reward their shareholders? Let's dive right into CD Projekt's financials and see what it tells us about the company. First off, CD Projekt trades on the Warsaw Exchange in Poland, using the ticker CDR. If your broker doesn't have access to the Warsaw Exchange, it also trades on an ADR using the ticker OTGLF. Right off the bat, we noticed the company has a market cap of around 10 billion US dollars. Now, this was surprising to me because trading on a smaller exchange, a $10 billion market cap company, that's big. Now, let's take a look at the revenues and see what's going into that valuation. Looking back to the past 6 years, we can see that the company's revenue peaked in 2015, reaching 798 Polish zloty. It has fluctuated below that level ever since. Notably, revenue in 2015 increased 7.3 times from 2014. And this makes sense because that was the last year they released a full game, The Witcher 3. In the succeeding years, the flow of revenue still comes from the Witcher series and add-ons to the Witcher series. The dip in revenues is consistent with what we see in other companies that release games a little more infrequently. Typically, when you're releasing your biggest game, that's the year that you're going to have your highest amount of revenue. These numbers that we've seen from the Witcher releases are going to give us a general idea of what we can expect in the sense of a revenue increase when Cyberpunk is released. To be thorough, let's take a look at another developer in the industry to see how it compares. Take-Two Interactive Software is an American company known for their Grand Theft Auto franchise and their 2K series. Their Grand Theft Auto franchise being by far the most successful of the two. While we recognize that GTA and Cyberpunk are inherently different kinds of games, we're going to be using it as our main comparable. Both had tons of hype and excitement before their releases. As well, they both are, open world, deeply interactive games. When we look at Take-Two's revenue, we can see that in 2013, the revenue increased by 2.3 times. Now this is impressive, however, not surprising, given in 2013 was when they released Grand Theft Auto 5. As we can see, just like in CD Projekt's case, in subsequent years after that release, the revenue dipped. In summary here, based on what we see from The Witcher release in 2015 and Take-Two's GTA 5 release in 2013, it's safe to conclude that we expect a spike in CD Projekt's revenue for 2020 and 2021 because of Cyberpunk 2077. Now, why am I choosing both years? Well, it's because the release date on December 10th isn't giving consumers that much time to purchase in 2020. However, there's going to be a lot, but we think a large majority will also purchase in 2021. For example, GTA 5 was released in March, so they had a full 9 months to get as many sales as possible in that fiscal year of 2013. So revenue is nice and all, but it's only a small part of the full picture. So now let's compare CD Projekt's revenue numbers with their stock performance from 2015 to now. Comparing CDR's revenue performance to stock performance is, well, shocking. Since Witcher 3 released in 2015, revenues have declined 14%. Meanwhile, the stock price has increased a whopping 2,000%. So, is this normal? Well, the answer is, it depends. Stock prices often reflect future earnings and future growth prospects. So what we do know is Cyberpunk is already very much baked into CD Projekt's current stock price. But is it overvalued? Or is it undervalued? Or is it fairly valued? Well, we're going to do some more due diligence to try and figure this out. In order to answer these questions of whether it's undervalued or overvalued, we're going to be looking at two of its main comparables, as well as we're going to be looking at an industry average multiple of 17 different video development companies. We will use Take-Two and Ubisoft as the primary industry peers. For the uninitiated here, Ubisoft is a fellow European video game development company headquartered in France, and they're known for Watch Dogs, Assassin's Creed, and Far Cry. As you can see, Take-Two and Ubisoft trade a little bit under the industry average sales multiple of 7.5. As you can also see, CD Projekt blows it out of the water, trading at a sales multiple of 67. It's clear that future revenues of Cyberpunk 2077 are being priced into this. Now this bears the question, can the stock grow into the current valuation, and is there still room to provide return for shareholders? If the market uses a comparable multiple to value CD Projekt as it does with Ubisoft or Take-Two, so let's just say a sales multiple of 6. Well, in order to justify their current valuation, CD Projekt would need to do 1.67 billion US dollars, so not Polish złota, in sales. To achieve that kind of revenue, CD Projekt would need to sell 30 million copies of Cyberpunk 2077 in a year. And that's assuming they stay at a flat share price. Now, if we assume a 20% uptick in the current stock price, this will move the market cap to $12 billion, which means in order to achieve that 6 sales multiple, you'll need to do $2 billion in sales, which equates to around 38 to 40 million sales of Cyberpunk 2077. Is this possible? Definitely. Will it happen? We're not sure. So let's take a look at GTA 5 sales to see what we can learn. Since its release date, GTA 5 has sold 135 million games to date. Now, typically games, as we mentioned before, are front-loaded in sales. But for simplicity purposes, we're going to spread those 135 million over the past 7 years, which equates to 20 million games per year. In order to justify a comparable sales multiple, Cyberpunk 2077 needs to sell 38 to 40 million copies per year, so roughly double what GTA 5 did, and this is of course assuming a 20% only increase in stock price. The challenge here is obvious. At 135 million games sold by GTA 5, it's second ever in video game sales only to Minecraft. It's also interesting to note here that Minecraft, which sold 200 million copies, sold to Microsoft for $2.5 billion US, which is actually only 1/4 of CD Projekt's current market cap. To further put the sales figures into perspective, let's remember that all 3 of the Witcher games sold a combined 50 million copies. So the numbers look, well, difficult. But we're not done now. Financials are only a small portion of what we look at when we analyze a business. So let's continue to look to see if we can extract an opportunity out of Cyberpunk 2077. It's worth noting that we have seen several US investors compare US earnings with the earnings of CD Projekt. Now, these aren't comparing apples to apples. So what some people don't know is in Poland, the financial requirements are a little bit different. So in Poland, development costs that go into the creation and the building of Cyberpunk 2077, these can be capitalized on the balance sheet as opposed to the income statement, which is the opposite in the States. Therefore, your bottom line numbers aren't going to be comparable. Having said that, we're not too concerned about this because CD Projekt has an ample amount of cash, so they're in a fine cash position, but it was just something that I thought I'd bring to our viewers' attention as we don't want other people to make the same mistake. So, up to this point, we've looked at CD Projekt's sales multiple, as well as what it'll take for CD Projekt in the form of Cyberpunk sales in order to justify an industry average multiple. What's important to note is there's no requirement to trade at the industry average. So we're going to look at Take-Two's multiples before they released GTA 5 to see if they align more with CD Projekt's current multiple. Looking from the years 2012 to 2016, we see that there is not really any comparison or similarity to the multiples that CD Projekt trades at. These could have been just because of the times. In fact, if I was looking at Take-Two as an investor in 2013, seeing 230% growth and a sales multiple of 2, I would have been giddy. Looking at what would have happened if you invested in them back then versus, say, the S&P 500, any investor that did their due diligence and purchased Take-Two back then would have made bank. This is why we don't recommend investing in the general market. Check out Gavin's video up here as he debunks diversification to learn more on this. So where are we at now? Well, we've confirmed that CD Projekt's sales multiple is super high, even when comparing it with the industry average or a comparable back when they released their top video. We also looked at other companies, but in interest of time on this channel, we decided to omit them from the video, but please, as always, do your own due diligence. At this point, many of you may be thinking, well, clearly there's no room for this stock to grow as it's way overpriced. Well, think again. There is so much more to investing in a company than simply numbers and financials. It's just one signal among others. Now we're going to look into current trends in the gaming market. The gaming industry as a whole has seen a boom since COVID. With more people spending time at home, they've turned to video games for entertainment. From top to bottom, this industry has grown. It's been one of the most benefited sectors in the stock market from January up until now. This trend has happened to line up impeccably with CD Projekt's Cyberpunk 2077. Gaming has also been growing globally, and this bodes well for Cyberpunk 2077 as they have voiceovers in 10 different languages as well as subtitles in 18 different languages. Not only this, reports from Steam in June say that China has pre-ordered more Cyberpunk games than any other country in the world. And by the way, China is the leading market in the video game industry right now. This could be a massive differentiator for Cyberpunk as it aims to try and come close to competing with GTA 5 in the amount of games sold. If we look at the revenue of China's gaming market in the past 10 years, we can see that today it is 4.2 times higher than it was in 2013, the year of the release of GTA 5. We believe that this is tentatively a very good sign for Cyberpunk. Given the Steam numbers and given the soaring new market of China, which is 4.2 times bigger than it was in 2013, things are looking pretty good there. So the gaming industry is booming, but you guys probably already knew that. So let's take a look at some of the worldwide trends on Google about the games that are being released this holiday season. Let's compare the latest installments of Assassin's Creed and Call of Duty with that to Cyberpunk. Valhalla proved out to be Ubisoft's biggest released game to date. This is actually quite promising for Cyberpunk. We can clearly see that the hype from Cold War, which was released in November, has been on the steady decline ever since. In the contrast, the trend of Cyberpunk has been on the continual rise. We think that it's safe to assume that the buzz around Cyberpunk will have a longer lasting effect than that of Cold War. One is a revolutionary new take on RPGs starring Keanu Reeves. The other, a quality installment in a well-known series. That being said, what's also interesting to see is the other two games' trends are decreasing during this holiday season, meanwhile Cyberpunk's is increasing. November and December are the biggest months of the year in the gaming industry, and Cyberpunk has a big chunk of December. If you don't believe me, let's take a look at some of the titles launching in December. Now, I won't show the trend line to each of these, but I've added FIFA 21 and Destiny 2 to the mix. These are two that are likely to generate the most sales along with Cyberpunk. FIFA has been, and may always be a beast when it comes to rising trends before a release. But people don't buy FIFA to scratch a Cyberpunk itch, or vice versa. Now, what's very promising here is Destiny 2's interest is actually waning into the release, which is the exact opposite of that of Cyberpunk. Again, this bodes well for Cyberpunk going into their big release. Taking a look at Cyberpunk's YouTube, we can see a video released only a couple of weeks ago with over 27 million views. And keep in mind, China doesn't have legal access to YouTube. Many find their way to the site regardless, but it's definitely not representative of the full picture of the interest coming out of China. So these are primarily 27 million views coming from outside of China, and as we know, China is the leading video game market in the world and has ordered the most pre-sales of Cyberpunk of any other country. And well, it's worth mentioning that my personal Twitter feed for the last several weeks has been seeing Cyberpunk 2077 being trended every single hour. And I'm continuously seeing more and more people tweeting about it as it gets closer to the release date. So what I'm saying is, get hyped. Now what we have here is a game that is going to be huge. Now it would have still been big had there been stiff competition, but given our trend analysis, it's free pickings for Cyberpunk. There is absolutely no denying the interest in Cyberpunk 2077. It has massive hype, it has Keanu Reeves, they're blasting out marketing campaigns that have happened from early December all the way up until release date. It is going to be huge. What we also know is the stock price is also huge. With the multiples the stock is trading at, it is not even close to be considered a value play. This is priced for growth and extreme growth only. Growth that would likely have to rival that of GTA 5, which is considered one of the greatest games ever. So we're basically saying that Cyberpunk 2077 needs to be one of the top 2 games ever in the world if it even wants to scratch the surface of its current valuation. Is it possible? Absolutely. So are we buying it? Well, find out soon. We wouldn't be doing our followers justice if we didn't talk about the risks associated with purchasing stock in this company. The primary risk is, as mentioned, it is holding a super high current valuation. If the game is delayed, if the experience is poor, if the Metascore is low, if it gets poor reviews, well, this is all going to have massive consequences, in my opinion, on this stock price. Basically, if anything even minor goes wrong, this becomes a very risky stock, as it is priced assuming it meets and exceeds all expectations. That being said, initial reviewers' impressions are all the same. They absolutely love the game. Additionally, it seems very improbable that the game be delayed again, as we're only days away from the release date. We at Behind the Money think, based on our trend analysis, that the media, the fans, everyone will be thinking about playing this game, which will drive the stock price back up to its all-time highs at 462 Polish zloty plus some. So after doing our due diligence on this stock, we have actually decided to go long on this stock. We are in at an average price of 376 Polish zloty. At this price, we knew we were significantly below Cyberpunk's all-time highs, which occurred before it delayed their release. Therefore, from our purchase price, we see a minimum 20% upside, but we think there's certainly potential for quite a bit higher. We will be watching closely once the game is released to continue to follow the trends and see if we can pick up any information as to how the game is performing. If we hear of some negative news, we will not be afraid to sell immediately. However, if everything is positive, we'll hold the stock until Q4 earnings. As at Q4 earnings, we don't believe that the revenue will catch up to the stock price. Therefore, we think after Q4 earnings, the price will likely fall a bit. I think for this reason, I see this as a bit of a swing trade based on all of the press this game is getting, as well as the global increase in gamers around the world. The valuation fundamentals don't always need to make sense. You need to compare all variables of a company before you come to an investment decision. In this situation, we believe the excitement that this game is generating is enough to push the stock price certainly higher in the near future. I'd predict that in early 2022, the stock is well below its all-time highs as it comes down to a more industry-level valuation. That is my prediction, and we can come back to this video in a year and a bit down the road and see how it plays out. As always, we are not investment advisors. These are only our opinions, and this is meant to be just educational content. So please do your own due diligence. We hope you enjoyed our take on CD Projekt and Cyberpunk 2077. If you have any thoughts, please share them in the comments below. We're always curious to hear what you guys think. And of course, please don't forget to subscribe and ring that notification bell so you don't miss our next analysis. All right, that's everything for today. Thanks guys, and see you next time.